Nexus means you have a presence requiring sales tax to be collected. This was established in 1972 by the Supreme Court with the Quill versus the state of South Dakota, I believe. The Supreme Court decided that you have an obligation to collect sales tax for a state that you're shipping goods to if you have a physical presence in that state. And a physical presence is defined as having a warehouse there, having a store there, or having a salesperson there. Now, from 1972 to 2018, that was the rule that if you had Nexus in a state, you had to collect sales tax. In last year, the state of South Dakota readdressed that issue. It went up to the Supreme Court, and the Supreme Court now changed the rule. The rule now is if you do significant business in a state, the state can require you to collect sales tax. The state of North Dakota says if you ship more than $200,000 into our state, you must collect sales tax. Other states like New York have ignored the Quill ruling and have said if you ship anything into New York, regardless of whether you have a presence here, you have to collect sales tax. Now, the state of New York only goes after you if it's enough sales tax to make it worth their while. And if you fight it, let's say you're a Florida company, you have no presence anywhere outside of Florida, but you ship to New York. New York will sue you in New York. They'll get a judgment against you. They'll try to localize the judgment in Florida. You have to fight it in federal court. Federal court will throw it out because of the Quill Act, but it's cost you a lot of money to fight it. So what happens is if you are large enough that you're going to show up on people's radar, you end up having to collect sales tax in the 46 states that collect sales tax. And that's meant by having Nexus. The system has a text data record, which we talked about, that lists all of the states that you have Nexus in. So what happens, looping back to the customer master and also in the ship to master, when you enter a zip code and your tax type is retail, the system will go out and check, does your company have Nexus in that state? If it does, it will go out and look for the appropriate tax code. It will look for the tax code one of two ways. If you subscribe to the web service, it will go out and get the tax code from the web service. If you don't subscribe to the web service, it will get the tax code from the zip code file in the system, which needs to be maintained by you at the company level. So it's a choice of paying for the web service or maintaining the tax codes in the zip code file, and we'll get to that zip code file in a little bit. If you don't have Nexus in many places, it's a cheap way to go. If you have Nexus all over, then the web service is a better solution. The other advantage of the web service is that it checks the sales tax requirement by geocode. A geocode is the geographical latitude and longitude of where a facility is. The zip code file only checks based on the zip code. So it really depends how accurate you want to be. In some places like Long Beach, California, you have Long Beach Boulevard. Long Beach Boulevard in the center of Long Beach is all one zip code. However, the tax rate on one side of Long Beach Boulevard is different than the tax rate on the other side of Long Beach Boulevard because of the school district tax. So if you only use a zip code, you'll get the same tax rate for both sides of the street. If you really want to be accurate, and some larger companies require that, you have to get the correct zip code based on the physical street address, and that requires using the web service. So that's the short version of sales tax. Then we'll move over to the right here. You can have a currency. The currency determines what currency you use for doing transactions with that company. A commission percent, a discount percent that the company gets, that ties over to pricing. If you have the company set up, for example, for retail pricing, and you put 10 in the discount field, order entry is going to take 10% off of the retail price and use that as the target price. Then you have the minimum order value, which is similar to hold over. You can set a minimum order value for the company. You can say, we only accept orders from this company of at least $100. And that can be for various reasons. It could be a complex ship to address. It could be what country they're in. Any number of reasons. It's another one of the things that's audited.
Frank, I have a question.
Sure.
Going back to that discount field, is that automatic? Are you saying if you put 10% in there and the order entry enters an order, it's going to take 10% off?
Yes, it is.
I did not know that.
And if you right click here and you want to set, or actually not right click, let me find the right key here.
So is that going to be 10% off the total order? Is that going to be not by line item?
No, that is by line item.
Oh, it is?
It adjusts the price by line item.
Oh, see, we are not using that field.
Well, what you probably have is your customers set up by price level.
Yes.
If you have a customer that's price level 1,
yeah,
that might be 10% off. So
right.
The
Okay.
pricing stuff is, I guess the honest answer is it's horribly complex because there's so many different ways that people can do pricing.
Right.
That's a good discussion for a whole separate training class on how to do pricing.
Right. Okay, thank you. I didn't realize that field was there.
Yeah. Now that's a field that's normally blocked at most sites, so people don't inadvertently put those.
Right.